right, welcome back to another episode of Sonoma Brain Trust. I'm Daren Blonski with Sonoma Wealth Advisors. We have Chelsie Runnings with Better Home and Gardens here in Sonoma with us, and Anthony Valluzzo. I won't call you Anton. I'll call you Anthony, as his lovely wife refers to him. Today we're going to be talking economics, talking real estate. We'll be talking COVID, some updates across the board. We're all walking here into the Thanksgiving holiday. You're probably watching this after you are all full and wondering whether or not you should be shopping for Black Friday because of COVID. And anyway, we hope you enjoy, and thanks for joining us. So Chelsie, what's going on in real estate in Sonoma?
So we've had another week of increase in mortgage applications, which is funny, or I don't know if funny is the right word, but it's interesting because we've had record-setting unemployment applications going through in the last couple of weeks, but we also have record-setting mortgage applications as well. And in Sonoma Valley, this month alone, we've had 46 home sales go through. An average day on market is 42 days, and we are sitting at a median price of $858,000. Compared to last year, at this exact time last year from November 1st, we had 22 home sales. So we've doubled the sales. We sat on the market for about 73 days last year. So we've doubled the days on market last year. And then our home price sales were actually up. So last year we were at $1 million. Median price. This year we're at $858,000, but we are about 30 days less on market this year than we were last year, and double the sales. So the market's still moving. It's on fire. People are taking advantage of these low interest rates. And we just got our increased loan limits for 2021. Last year for Sonoma County, for a one unit, the loan limits were $704,950. And for 2021, the loan limits are $707,250. So I feel like every week I get on here and there's not much change. I keep telling you guys that the market's on fire and there's too many buyers and not enough inventory. But the buyers are out there. The low interest rates are keeping them coming. And the lack of inventory is kind of putting a little roadblock in our way of keeping the market moving.
But it'd be interesting because usually this time of year, real estate slows down. It doesn't sound like it's slowing down.
Nope. And from the data we're looking at right now and the mortgage applications and the requests for showings, it looks like our market is going to continue to move full steam ahead through the end of this year and well into the first half of 2021. And it's even on track to be even better than we've had in 5 years. Faster sales, more buyers. We're just on track to be doing more than we've done in 5 years.
That's interesting. So I think it's, yesterday, President-elect Biden said that he's going to nominate Janet Yellen to the Treasury position, which is big, right? So she would be the first Treasury head in history to be female, but secondly, to also have been a Fed president prior, which is different. So, Tony, for our viewers, what's the difference between the Treasury Secretary and the head of the Fed?
Well, aside from the title, the head of the Fed is the one that sets basically policy for what the Fed's going to do moving forward within obvious limits of the law. And the Treasury Secretary is going to be one that communicates both as kind of the in-between from the presidential administration from Biden to the Fed, but also usually help the Fed in reaching certain goals and crafting that sort of policy. It will be really interesting to see if Janet Yellen can do an even better job. I know that the current head of the Fed is somebody that seems to be a little bit more, I guess, I don't want to say liberal, but a little different-minded from the current Treasury Secretary Mnuchin. So Janet Yellen coming in, she's got a lot of knowledge, firsthand knowledge of what is going on, but she also brings in a different perspective. So if the head of the Fed stays the same, she may not be able to work with them better than Mnuchin, or at least forward Biden's policies and goals better than Mnuchin has been able to do.
Yeah, it'd be interesting because, having such a strong knowledge base with the Federal Reserve, I would think that that's really going to be a helpful thing, right? To be able to communicate effectively with Jerome Powell, the current chair, and helping us because, regardless if these vaccines work that it seems like we've got now, those are going to take some time to implement. So spring, summer, fall time, maybe we get back to some normalization, but we're still going to have incredible debt levels, and it's going to take an incredible act of unwinding to figure out how to navigate monetarily through all the money that's going to be spent and has already been spent. And I guess you probably couldn't pick someone better with more experience to do that than Janet Yellen. She seemed to at least run a pretty steady hand at the Fed when she was there, and she certainly will know how to communicate with everybody now.
Well, it's kind of a commitment on Biden's, unless something changes, which it very well could. But if he is going to stay with Powell, he replaced Yellen.
Right.
So the consistency that he's showing, his desire to keep kind of the, we always think, when we think of Fed consistency, I guess most of us think of Alan Greenspan and just how many presidents he was head of the Fed through. And so there is kind of that thinking that the more stability the Fed has, the better. But Greenspan got to the point where, when he was testifying to Congress about what the Fed should do and what they're looking at, if he coughed, markets would react. So hopefully we're past that. But it's going to be very consistent, and yet it keeps somebody very knowledgeable about what the Fed can and can't do as head of the Treasury. And it's really going to be hopeful, I think, for a lot of aspects of the economy, not just the stock market, but a lot of different aspects of the economy.
Well, yeah, and certainly, if you look to the market as perhaps a barometer of what the economy thought about that selection yesterday, between yesterday and today, we've certainly moved very aggressively to the upside. And really the kind of one of the outperformers we've seen this last month has been the energy sector. But I was just looking at the numbers this morning. The energy sector, XLE, which is the ETF that tracks the energy sector, is actually up 41% since the 1st of November.
That's crazy.
I mean, think about that, right? So, standard logic would say, okay, Biden becomes president-elect. If you were sitting November 1st and you were going to predict that Trump was going to lose, that Biden was going to win, and then if you told me that XLE was going to be up 41% by the 24th of November, I'd look at you and say, you're kind of crazy.
But this is 2020, so
2020, right? So
everything that we thought is out the window.
Yeah, and then to top that off, I mean, just if we want to talk about stuff just acting completely crazy, I'll just share some screens for a minute to give the viewers kind of a sense of what I'm talking about. But this chart here is XLE, and you can see this move here. This is right here on the 29th. And we moved all the way up. There's 44% since the 29th in XLE. That's a monster move, right? And you would think that if Biden's the president, he's going to beat up the oil industry. He's going to beat up the energy industry. He's going to turn to renewables. But the reality is the impact of that is it's probably going to create more scarcity and demand. And in fact, if you look back in the Obama administration, for the first time in the history of the United States, during the Obama administration, we actually became energy independent, right? So think about that, because fracking, and there's no Democrat that would say, oh yeah, the Democrats championed oil and therefore we became energy independent during the Obama administration. Not going to happen, right? You're not going to find that person. So we're seeing that kind of potential reality happen in the energy sector again. The other big, real huge piece of news that's interesting and speaks to the tune of what's going on with Janet Yellen and some of the stuff that the Fed's doing and the fiscal stimulus is Bitcoin. I mean, Bitcoin has just been an absolute tear. And if you look at, let's do the same kind of track there. So there's November 1st, and we look at where Bitcoin's been since November 1st. Try 69, 70% up.
Is this because, does this play into the modern money theory?
Well, it plays into the philosophy that you've got an incredible amount of money printing going on. And at some point, that all this money printing has to have a inflationary nature to it. Now, historically, it doesn't support that if you look at what Japan's done. But the thinking in the commonplace is that, this is going to inflate. And so Bitcoin is a scarce item. So people who have money are moving money into Bitcoin because they feel like that there's a scarcity there and that they can protect and preserve their wealth if the governments are going to print. This is a dashboard I use. This guy, Clark Moody, put this together, but this is really interesting. Down here on corporate treasuries, there's $16 billion in corporate treasuries. So this means that this is actually businesses that went out and said, these are our cash assets. We're going to put it in Bitcoin. So think about that. I mean, that's a huge move, right? And so as the market cap, so the market cap's $353 billion already, 4.5% of it is corporate treasury accounts. As this cap goes up, you're going to see more and more institutional participation, which will drive this price further. And so now everybody's heard their cousin Vinny who invests in Bitcoin, and he goes to Christmas and Thanksgiving and talks about, oh, Bitcoin this, Bitcoin that. And everybody says, oh, they kind of dismiss him, right? But this week, JP Morgan came out and said each Bitcoin is going to be worth $140,000 per coin plus.
Oh my God.
That's JP Morgan. And right now it's sitting at 19,000. So you're seeing these institutions just move in this direction in a big way. It's going to be something that people 6 months, 8 months from now are going to be just mind blown by how much money moves into this area. And largely because the money printing.
It's so interesting to see what's happening right now in the market because we're basically back into March. We're in the second wave of COVID. Shutdowns are happening. There's no toilet paper again. People are freaking out. And we're seeing positivity in the market. We're not seeing the drop like we did.
It's because you don't have the liquidity issue, right? So what happened the first time is you had liquidity issues, meaning that what caused the market to go down the first time is because the stocks started dropping so fast, you had all of the hedge funds that were running to their bond funds and liquidating them because they needed money to cover their margins because they were over leveraged. And that created a further sell in the bond markets, which then escalated further into the stock markets. Then the Federal Reserve stepped in and said, oh, guess what? We're going to backstop all this. And the going thought right now is very much that the Fed is still very much in the market. They're still very much participating. In fact, the show I do tonight, I guess it'll be when everyone's watching this, it'll be Friday. But the Tuesday show we do on the economy tonight with my team, we're going to talk all about how Janet Yellen is actually on record to saying that we need to change the mandates and the dictates of the Fed so that they can buy the equity markets. So think about that for a sec. That's the Federal Reserve saying, oh, we're going to go out and go shopping on the stock market. And so thus you see the stock market really finding a lot of excitement about Janet Yellen. And you see people who own the stock market saying, maybe I should diversify. What's this Bitcoin thing all about? Maybe I ought to look at that. Mark my words, Warren Buffett will say, I think I missed the trade on digital currency because he's not for it, but he will eventually say, wow, oops. Lots going on in the markets, lots of interesting stuff going on. And the markets did actually enjoy the fact that Trump decided to sort of concede, but not really.
Well, how's the lack of stimulus going to affect? Is it going to, I mean, we're not going to have a stimulus package until next year. That's clear. So what do you think we're going to see in the markets then?
Well, again, the markets are different than the economy, and they have been all this year. And I think that's the big story out of 2020. And I think what you're going to see without the fiscal stimulus, you're going to continue to see the further disparity in income. So those who don't have money, those who are lower income, sometimes minority communities, they're going to hurt more until we get fiscal stimulus, because that's where the jobs are not. That's where people are suffering the most, is on the lower end of the economic scale. The people who have money, the people who are professionals, they're not suffering. They're doing very well this year. In fact, some people have done better this year than last year in the professional setting. And there's a big disparity in income. And I think as we don't get that fiscal stimulus, which is coming from Congress because they can't get along, you're just going to see that group of people further find themselves in positions that are not good. And, just playing out a crazy scenario, right? Let's say if Trump doesn't truly concede and that somehow he magically finds these fraudulent votes that he keeps claiming about, but never has any evidence of. And I'm just saying that from Switzerland perspective here. We're still waiting to see this proof of fraud rather than just statements. Let's say he does find that and they unvalidate the election and then Trump wins. And the civil unrest will be unbelievable, because you have the chunk of people that were largely participating in the civil unrest, which was across racial, because it wasn't just Black Lives Matter. There was a lot of people that were instigators that are on the lower end of the economic landscape as well, will definitely protest and definitely create a lot of really challenging things. So there's some really interesting dynamics. I think the good news right now is it does look like President-elect Biden will be the president. He seems to be more sympathetic and empathetic to the lower end of the economic scale. I think that will bode well economically. And as long as the Republicans retain the Senate, I think things look great for the economy and for the stock market. If the Democrats take the Senate, that doesn't look good for the stock market. The stock market loves a government that cannot get along. It actually likes that. And so nothing gets done. Nothing gets done. That's except right. For all the people who have money who can continue to work the system the way they were working the system.
That's right. Status quo.
That's right. That's right. And taxes is a big concern for people. The Tax Job Acts that passed in 2018 pushed the estate tax limit all the way up to $11.5 million. Tony, as you're well familiar with, what's $11,540 for individual and $22 and change for a family?
Rising with inflation, although we haven't had much inflation. It's about there. It's the tax level, though, has held steady. So I don't know if that's going to have an effect on much, but yeah, I mean, 11.5 million per person. There are a lot of very, very comfortable people that don't have to worry about estate taxes.
And if the Democrats win the Senate, a lot of people think that estate tax limit's going to go back down lower, which would create a lot of concern.
True, but under Obama, they did do a number of things with the estate tax that hadn't been done before. And one of those includes being able to defer any sort of payment from the death of the first spouse to the death of the second spouse, as long as that spouse doesn't get remarried. So that ability wasn't there prior to Obama. And so that's a good thing, even though, compared to the increase in estate tax lifetime exemption, it wasn't increased as much, but Obama did introduce new things that were equally as helpful, if not on par with what had happened before. Plus, he gave consistency to the rates going forward and the levels going forward, so that we don't have a sunset like we did prior to when what was that, when he took office under George W.
Yeah, it is interesting how there's all these unintended consequences. Is, during political season, everybody likes to pontificate, oh, if the Dems win this, if the Republicans win this. But, like, who would have thought during the Obama administration that would become the world leader in oil, and be totally energy independent, like on oil. You just wouldn't think that. It's interesting. So it'd be really interesting to see what are the unintended consequences of the Biden administration. I did really quick want to show the viewers and you guys one more chart before I let you go, but it's this. This is the SPY, which is the Standard & Poor's 500. So this is the largest 500 U.S.-based stocks. And there's this pattern I've been tracking in the candlesticks. So the candlesticks represent price action in the markets and over a period of time. And there's this kind of W, and you can see it best, and we just went through it. So see that W movement there? And we actually saw the same pattern way back here in June. And we saw the same pattern back in May. After this pattern completed itself, we had these mega moves up right here. And each time they were bigger moves. And where the market's looking right now, if this pattern continues to play out, I don't think it's too hard to assume or suggest that we're going to see a mega move up in the market here pretty quick if things keep doing what they're doing. And you can just see how those patterns played out, and they're kind of like these reload. We call it cocking a gun, and it's reloading and getting ready to cock up and move and shoot up higher. So I think there's a lot of positive things on the horizon for the market. I mean, run a scenario. Trump actually concedes. He gives up power, appropriately. Biden comes in. They put stimulus out in a big way. You can see a lot of scenarios now where things look good, and for the future, at least for the stock market. And certainly I think Janet Yellen, Tony, might be a pretty good option for us, and which would ultimately, I think, Chelsie look great on the real estate market.
And how many people were afraid that Elizabeth Warren was going to be Treasury Secretary? I think that's a sigh of relief for a lot of professionals and a lot of people that she wasn't selected.
I feel like there's been I feel like even though everyone is still so kind of Republican Democrat, although they're the wings on the same bird, I felt this sense of kind of relief among everybody over the last couple of weeks. Maybe I'm just imagining it, but I feel like even between the Trump supporters and the Biden supporters and just everyone that I personally am around or know, I feel a lot less tension. I don't know if that's me or if that's just like what people are seeing happening in the economy right now and just a little bit more stability. But I feel like we're kind of coming off of this super intense roller coaster that we had been on of just emotion and anger and everything else.
I've definitely seen that. And it's taken interesting forms. Some people that are Trump supporters just felt like they knew Biden was going to win. Some people who are Trump supporters definitely wanted to see some of his policies continue, but knew that he had his moments of just absolute, I don't know, maybe stupidity is too long of a word or too harsh of a word, but some of the tweets and problems he was getting himself into, and a stability in the biggest sense. I think everybody had their hopes up that Trump would drain that swamp, but at the same time, he kind of just switched it. I mean, the number of people that either he fired or left his administration has got to be the longest ever by a factor of 2.
I think the number was like a 93% turnover rate in his cabinet.
And then he goes ahead and fires Krebs, which doesn't make any sense, I think, to me. And I don't know what his position is with Biden yet. I haven't heard anything about that. But, I think that things like that, consistency across the board, somebody that people can rely on. I think a lot of people are able to relax and don't have to justify things to people that question that. So, even the people that felt like they won when Trump won, probably just want a little bit more consistency and peace. At least I'm hopeful for that.
Well, and I think too, it's just like the country's at a place where, I mean, even take the comment about Warren. It's like Warren has built a career fighting people on the other side, right? And whether you support her or don't support her, but she's really put a stake in the ground of fighting big companies and big banks. And I think people are really weary about fighting right now. They just want some peace. I think all of us spend a lot of energy trying to protect our families from COVID. And, the last thing we want is politicians trying to fight too. You know what I mean? Does that make sense? And I think after the election's over, everybody's just kind of like, okay, good. Let's just take a deep breath and try and enjoy our holidays without too much craziness.
I think the election results too, when you look at more than just the presidency, when you look at the local elections and the senators, I mean, Democrats lost seats in the House. We're pretty sure that the Senate is going to stay Republican. A lot of the local elections that really mattered, or that were really big, Democrats lost. There's this kind of message that voters sent that I think we're just starting to really understand that, maybe for the presidency, a Democrat or maybe just a change is warranted. But at the smaller and more local level, there is still a very strong Republican base. I don't know what that's going to mean. I don't know what the Democrats are going to do with that. Obviously, some Democrats are worried about that, some aren't. It's going to be interesting. I mean, if nothing else, I think it really points to the fact that people are tired of the fighting. People do want to get along, but people also see the benefits of both sides. This was a close election. We had the most votes that has ever elected a president. We also had the most votes that have ever elected or ever voted for the loser of that same election. So, I think everybody wants to kind of stop being so polarized. There's that, Daren, you probably have seen it too, and Chelsie too. There's that polarization of, I think it's not just Senate, but congressional representatives, where they're blue for Democrat and red for Republican, and then they show the number of times that they've worked with people across the aisle and how that's really been focused more into the polarized Republican versus Democrats over a span of about 50 years or maybe even longer. And it's just so much change going on that, I think for at least the next 10, 15 years, we're going to be able to point back at 2020 and not just say, that was the year of the pandemic. That was the year where we had to change the way we looked at everything. But so much is going to come out of this, not just for the economy, not just for the market, but in probably areas that we don't really see. I mean, there was an article in the journal the other day about how people who have been displaced or lost jobs due to what's COVID, restaurants as well as people in the service industry in general have fallen back and become more self-sufficient in the form of entrepreneurship, right? And they're making money for themselves, or making a niche for themselves with a lot more efficiency and effectiveness than they were before. That personal trainer who worked for 24-hour fitness or what have you, they were earning a good living, and then they got displaced, and then they go out and through social media or what have you, they're able to make more money by supplying a service that is in more demand, the personal training, because of COVID. And so that could be a very well big shift that we'll see the effects of, not this year, not next year, but in a number of years.
I think we talked about that way, way, way back in the early start of COVID, back in April or March when we first started Sonoma Brain Trust, that these hard times, these kind of shifts in the economy and in the life will make people pivot, and people will come out on the other end better than they went into it because of it. And I'm personally just very hopeful for what's going to come next year and the years after. I'm feeling good for the first time in so long. Even though we have another wave of COVID, I am feeling way less stressed, and I'm feeling really optimistic.
It's interesting too, since you did bring up COVID a lot there, what you guys think about the vaccine talk. I've seen that it positively affects the market, but at the same time, there are these questions about storage and transportation. And I'm wondering, I don't know, what your long-term thoughts are on whether or not this is going to be something we're going to see in the next 6 months.
I think in terms of a vaccine, people are going to be scared of it just because they rushed it too quickly. So I think we have a false hope that it's going to be the cure-all. Personally, I won't get a vaccine because you did that in 6 months. That to me is so scary. And from the people I've talked to, I think that that's kind of the general feeling about it. So I think right now we're playing with a little bit of false hope that this vaccine is going to come in and fix everything in the next few months. But I don't know. Maybe not. Daren looks up COVID stuff on Google Trends all the time to see what people are doing and what's going on out there. So maybe he has a different idea than I do, but that's my take on it.
No, I mean, I'm with you, Chelsie. I'm not going to get the vaccine right now. I'm going to watch it. I'm going to see what happens with it. It's interesting. You got a COVID. How long have we had COVID viruses? And then took us 8 months, and now we have a vaccine for COVID viruses. Yeah, I'll be a slow adopter. I'll keep my family protected, and we'll stay protected and be a slow adopter on this one. Because you just don't know. With all these new technologies, you start messing around in the body and shooting and injecting it with stuff. And it's not that I'm anti-vaccine at all. We don't know. So let's wait and see before we make determinations on this thing. And I don't think I'm going to rush out, but I think it's a very personal decision for everybody.
Yeah.
Well, we should leave it there. Thank you for joining us again. And we will hope that each of you had a great Thanksgiving, because you'll be watching this after Thanksgiving. And Tony, thanks for joining us and stepping in for Mary today. And enjoy your guys' Turkey Day.
Yeah. Thanks for having me.
Have a great Thanksgiving, you guys.